Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting a technical update from longtime KE Report blog contributor Bob, also known as BDC. And he's prepared some charts for us today of a couple different markets that we're going to dive into. First up to bat here, Bob, we've got a chart of the dollar, the DXY index. Tell us what you're seeing on the chart. It looks like a lot of Fibonacci levels lined out for people.
There are a lot of Fibonacci levels, but basically it dawned on me what we've got here is a developing, what they call it's a butterfly pattern. And right here would be the perfect butterfly if it went up to this X, Y, Z, which by the way is my back box idea. And I also think though, what if I'm wrong? So I'm going to do an A, B, C, D up to here at about 38.2. So it looks good. It's ready to go. People can check this out later by taking a look at it.
Well, now you've got a chart pattern of the butterfly pattern so that you can, I guess, show people in theory what it's supposed to look like. Maybe let's jump there next, Bob. Yeah, and then
Right.
walk them
Yeah.
through this.
Yeah. Now this is the bearish butterfly, and the odd thing is that it starts out as a bullish pattern. So C to D, and now look what happened. This I've never seen one this perfect in my life. And this one was within 15 pips. I forgot to put the thing up there on the right, the exact, but within 15 pips, it's a bearish butterfly exact. And then it pulled back. Now what?
Well, so when you look at that, Bob, that's a good question. Now what? Now that it's completed that pattern, what usually happens after the bearish butterfly? Are you expecting the U.S. dollar index to keep pulling down because recently it's had that nice bounce, but how are you looking at the trajectory?
I reset it. This is a reset. So I said butterfly flew now, reset. Now what? It can continue down, but it went to a perfect 50% pullback from where it was. So this is a reset. We'll see what happens. This is where we are as of 3:45 this after, or what is that? 2:45 this afternoon.
Yeah, and this is Friday, and so we have seen a lot of
Mm-hmm.
market turbulence today. So the dollar was not spared, neither were the general markets. But we have seen at least a little bit of a boost in gold, and I think you've got a gold chart here for us. So let's maybe go there next. This is a longer range pattern that you
Mm-hmm.
have here. So walk us
Mm-hmm.
through the double bottom.
Oh yeah, this is, and and all our long suffering gold guys that that they said it was a cup and handle. Man, that was a long cup. And finally it bottomed in December of 2015 with a double bottom, a nice little double bottom. This is a weekly chart, so those are 2 or 3 weeks there. Now let me go to the next one, and here is where it went up, and then it came back down into 2022, the fall. And I think it was September there. And it had one of the rarest things that hold. You see triple bottoms all the time, but maybe 9 times out of 10, they bust south. This one held, and man, it was a springboard for just a great, the greatest gold run we've ever seen. And let me show you. There it is. We're pushing the limits, and I'm expecting a pullback, kind of at least to that shaded area there. But you know what? I don't know the future. Neither do you. All I know about the future is every significant event is a 50-50, no matter the odds. If it's 100 to 1, could be that one.
Well, Bob, let me ask you. I mean, I think it's nice that you showed the major bottom, which was back in 2015, and then that false breakdown at the end of 2022. And yeah, that triple bottom, we had the September, October, November. It kept getting down to like 16.18, 16.20,
Hmm.
and then it got down to that 16.14 on this chart. And then we had this epic run. It goes up, it
Hmm.
tags over 3,500. And now you're looking at where the possible pullback could be. And you've got noted on here some of the fib levels down, it looks like in the 2800 to 2600 zone. Do you really think it's going to get that far down if it pulls back?
Well, it could, and the reason it could, I don't. I think I mentioned this one of our last shows. You see this area here? That's a consolidation zone. And you see this area here, that's a consolidation zone. You might include this one. So that's the second consolidation zone. This is the third consolidation zone. It's smaller. This is a consolidation zone. That's why I think the possibility is for that, because this is obviously the top consolidation zone. And it looks like a bunch of corn stalks pushing north there. Now, this is a monthly chart, so those are months there. And we just came into August, so we'll see.
Well, Bob, also those corn stalks you're saying, some people, I think they call them like cat claws or something, but there's different
Mm,
names for those chart patterns. But when you see a bunch of really long wicks like that, and it looks like, the pricing went up and then it came back down, and the pricing went up and it came
mm,
back down a couple of times.
right.
Is that an indecision pattern to you where you see it like, or is it a topping pattern? Is that how you're looking at
Let
it?
me let me go right ahead. I think the next one. Yeah, okay, here it is. We came right in. This is three drives to the top after making, now, the first time I've seen this where it makes a spike high and then we do three drives. But these aren't three drives to the top. These are three attempts. So you can see after the spike, you say one, two, three, and now we're pulling back. So like I say, by the way, this is a potential bearish Gartley formation. Now, I've never seen it where it would go three times like this. So I think we're pulling back, but I don't know. I kind of wonder after looking at the dollar today, but that's for future reference.
Well, we'll keep our eyes on gold. It has made three attempts here to break one way or the other. We'll see if it finishes the bearish Gartley pattern or if it finds the energy to break out. But I think you've also got a chart of GDX. So let's look at the gold equities and how they've been faring.
Yep. And now this is a long-term chart. It's weekly. And now the 382, that particular Fibonacci number, 38.2%, is very key in technical charting. Anything that stops at 382 and then heads north is considered very powerful, very strong. So gold can be strong, GDX can be strong, and still go down to the 42, 43, 44 level and still be very strong. Plus, that matches that peak way back in 2022, which is a peak after, uh, everything we talked about before. By the way, here is that triple bottom down here.
And Bob, when you see something like that 2022 peak, that's lateral pricing support. But when it's matching the 38.2%, does that give you more credence that that level's
Yeah,
important? And
well,
you can even see
yeah.
some
Oh,
congestion in 2024 too.
anytime you see something in a chart that makes sense, use your own logic and thinking. I'm telling you, that's what I do. I think everybody has the ability to do that.
Okay. So definitely something we're going to be watching if gold pulls back. Obviously, it would make sense for GDX to pull back. And then I think you got a couple other things in store for us here. Silver.
Silver?
Who cares about that though, Bob? No, silver has had an epic run. A lot of people were looking at one of the levels you have note on here, that 41.52. A lot of technicians have come on our show and said, "Hey, 41 to $42 is a
Mm.
resistance zone." It didn't quite make it though. It got up to like 39 and some change. So how are you looking at it now that it's corrected some?
Well, this chart is actually one I produced quite a while back, and the 41.52, that is an ABCD plus 27.2%, which is an incredibly important percentage extension. And the ABC here, it's right here, ABC D plus 27.2%, and there it is, 41.52. That's the exact number. The exact ABCD was 36.391. And here we got to here. Well, what I did is I did my little back box thing, and I got it up to 39.105, and it actually went to, I think it's 39.514. That's the same stock there. That's the same at this time. This one was done in July, and that's a July month. So that's what we got up to, 39.514. And this one called for 39.105. The thing is, I'm still not sure that we're not going to head north and at least take this one out before correcting. And if we correct, probably down here someplace.
Well, two questions. Since it
Okay.
hit your back box target pretty close. I mean, close enough to that
Mm-hmm.
it's I
Oh,
think it's
yeah.
within range.
I think
Do you
so.
think could it be the completion of the move? And then you said, hey, maybe it's still got some room to run. Explain why you added 27.2% onto your ABCD. I think most people get A is an up wave, B is a down wave, C is an up
Right,
wave,
right.
but why add the 27.2%?
It's a standard power extension. That's the best way I could conceptualize it in word terms. It's a standard power addition. You'd think it would be 38.2%, which is the inverse of 61.8%, which is Fibonacci prime numbers. But no, this is the square root of 0.618. I
Ah,
think
okay.
it's 0.618. Yeah, it's the square root. But it doesn't matter what I don't really even care about that stuff myself. I just know that 27.2% is one of the most important Fibo numbers because it's the push. It's the push beyond a normal 1-to-1.
I see.
That's the only way I can put it in word terms.
Okay. I was just curious because a lot of people do use the 38.2%. So the fact that you used a
Right.
different number, I just was curious why I haven't seen that
Hmm.
used before. But hey, now we know we've learned something new on this webinar today. Well, yeah, I think you got one other surprise in store for us here. And it's a it's a surprise to all of us. Copper completely fell out of bed. That is the longest daily candle to the downside I have ever seen. And I think
I'll
this was
tell you.
obviously on the back of the tariffs. But when you see this chart, what do you make of it, Bob?
Well, the word says it. It's a collapse. And the funny thing is, you had asked for me to maybe add a COPX, COPX chart. Don't have to. It went up to 44 and then it dropped to 42 and now it's at about 43 on the long term miners, the copper miners chart, and they sort of shrugged their shoulders and said, "Okay, who's manipulating the markets today? Really, that's that's what's going on here." So anyway.
Yeah, Bob, we were talking off mic about this, and I've talked to other investors about this and said I don't understand why COPEX is not responding to the higher prices. It's almost
Hmm.
like people don't believe these higher prices are going to stick. And so it didn't really move up a lot, the COPEX, the COPX, which is mostly the big copper producers. And then when this crash happened, this collapse, it didn't really fall that much. So I guess it was kind of a non-event for the actual equities, but it was a big event for the copper futures and the pricing. Just one more question on this. What do you think happens now after a collapse like that? Are you expecting a rebound, like a snapback rally, or are we in danger of just continuing to try to tread lower here to the
I
downside?
well, I don't know. Like I say, I mentioned before briefly that I saw something in the dollar that it may tell us that there's more upside on everything. So I just don't know. We don't know the future. However, the most likely thing is it's going to come back into here. It's going to come back someplace into here and settle back down. And then we'll see. The one thing about the copper chart is it's much more mundane than the other charts. I mean, if you look at the actual top and bottom here, it actually looks a little bit like natural gas now that I look at it. But compared to other charts, if you compare this one to like gold, there's no comparison. Or maybe there is. Now that I'm looking at it, no, there's no comparison.
No, it's kind of had three attempts to get over five, and it did. It got over five, back in 2024 in May, and then it did it
Yeah,
again in
yeah,
March, and then this was the third leg higher. So there's your three drives to the top, but it
yeah.
looks like it fell off the top, and then and jumped out of the building and shot all the way down. We don't need another Widowmaker like Nat Gas, so we'll just keep watching for copper. But it was interesting
Mhm.
to contrast this effect versus what happened in the copper miners, and then we've got one
Right.
other chart that has
Oh
exploded to the
yeah.
upside. And
Oh
I think
yeah.
you had a good point to make on this next chart. And it's one that
Oh
we've
yeah.
talked
This.
about on our site before.
Mm,
Hat tip
mm,
to Dick Tracy, who has brought this to our
hmm.
attention.
Oh yeah. This is a monster, and this is a long term, right back to the time they listed it, which is key here, because it was listed under this high, which was the all-time high from 22-23 until I think January, February. That is the most powerful move in charting. To break an all-time high, particularly at this railroad tracks level. Railroad tracks, then we hit here, we build a new highway, railroad tracks, and then here like they say, never short of railroad tracks. And then we come here, we break this here, a beautiful, beautiful buy zone. Let me get to the buy zone here. Now this is a more recent look. This is really this year. Look at the railroad tracks. Look at the railroad tracks. Best buy you could hope for is 15 cents here. The original, the deepest you got before was 5 cents, but here it's 15. Beautiful buy, obviously. But take a look at the volumes. All of a sudden it's building. And then we touch the old break. Then we bust again. The second breakout, forget about it. This guy's going to the moon, and that's where he went.
Yeah, so when it tested that all-time high breakout level and then broke above it, you got a double breakout here because you're breaking above the prior breakout, and that's why it shot so high. So you see the big reversal candle down, though, that black candle in the very end there. So what do you make of that now? Is it something where a gap has to be filled, or what do you think the most likely probability is?
It already has come down to this first gap. Now, by the way, I call this 382. Let me just back up real quickly. I had a 382 power pullback here, and it's at 70 cents. Here, since we went so high, it's at 82 cents. But this first gap is right around 50%. A standard pullback for anything like this would be 50%. So it's always between the Fibo numbers, the Fibonacci numbers. And it's already done that. It doesn't show here. I didn't have time to do today's, but it's already down to here. But the big thing is, over time, will this thing hold here at or above 50%, which would be very strong for this, or will it come down to here? Will it fill this gap? There's a good chance it'll come down and drift down to fill this gap, unless they have sparkling news. See, this is all news driven now. You know the company that all these things remind me of, I was always impressed by Kirkland Lake. I've never seen a gold company or any company continually do an escalator up without a big pullback. And I think they were finally bought out by somebody. They had to be, because it's not there anymore.
Well, yeah, they're best in class, and they were bought by Agnico Eagle, who is the best gold miner. So that's why Kirkland Lake's not there anymore. But yeah, that was a chart that just kept going higher and higher and higher. Everybody was waiting to buy the dip, and the dip never came. We'll have to watch out for HydroGraph to see how they do with their graphene and their product. But an interesting chart to highlight to end it off today. And Bob, it was great having you on the show again, like always, to go through all these charts: the dollar, gold, GDX, silver, copper, and even HydroGraph here, just as an interesting chart that's been circulating on our blog. So a lot of good ideas here. And if you want to check out BDC's site, I'll put a link to it down below so you can check out his analysis. I always appreciate you putting some charts on our blog on the KE Report. So come over to the KE Report and see it. He goes under the handle BDC. And until next time, Bob, great to have you on the show.
Thank you very much for having me on the show, Chad.